to all traders. Today we're going to talk about metals and energies, and we're going to talk about the gold, of course, and also WTI oil. Gold started moving higher yesterday, although it's seen a weekly low. I mean, actually multi-week, I would say low, down around 1440. And that was because there were news that US and China negotiations are in a stalemate once again as a result of some arguments regarding agricultural purchases. And also, of course, because it seems like the markets are really asking for some sort of resolution, especially most recently where we've seen China requesting rolling back tariffs as part of any sort of negotiations to sustain at least or to conclude to a phase one of this deal. Now, at the same time, you would expect the oil to move lower, right? But it's actually rising. It's rising along with gold. And that is because API reported a surprise crude draw yesterday. Today we have the EIA, and we should keep our breaths until the results come out. Now, on the gold, starting with, of course, we're moving exactly as we expected. We had this move ending up here, and we are expecting wave minor 4. This is minor 3. Okay, to complete round 1420. Why? Well, since we've had this zigzag over here, and then WX, we expected the Y wave, which is going to be another zigzag, right? So this is a double zigzag. Normally on zigzags, we have a duplication of the first wave, right? Oops, excuse me. So the duplication of this, which is pretty much the extension, 100 extension, is right at 1420. So following this move to the upside yesterday, I see this as part of wave 4. So we should end wave A, B, and then we should see another move to the upside to complete wave 4. That might be around 1478, but the truth is that it actually might just run out of fuel and start turning lower, right? Anywhere between 1456 and 1478, I would say. That will be part of the correction. And why I see this as wave 3, 4, and 5 is because if we take the Fibonacci extension of this last move, which is pretty much wave A and B over here, we will see that the 161 extension is around 1456. This is now done, right? So we're looking at the 261 extension now, right? And this is exactly at the same level as the 100 Fibonacci extension of the first zigzag, which makes it a very, very strong confluence level. Now, at the same time, don't forget that we are seeing this move being supported also by the RSI and the MACD, okay? Because they both have a nice bias on the upside. For some reason, this disappeared. Anyway, they have a nice bias on the upside, MACD and the RSI, so that should support the short-term view to move a little bit higher to complete wave 4. Now, WTI is a little more complicated. Okay, it did indeed move up a little yesterday. The thing is that we were seeing this as a 1, 2, 3, 4, and 5. Well, this is the wave 1 intermediate with wave 2 intermediate. And then I was looking at this to be 1, 2, 3, which is down here, then 4 and 5. Right now in the minute degree, we're looking at this 1, 2, 3, 4, and then 5 down to complete minor 3. Now, since we trade below that level, right, we can still see this as a correction of an impulse to the downside. Now, this correction is a complex zigzag pattern, okay, to me, but what really worries me is the fact that prices have remained trading on the upside. I mean, as long as we trade below that level, we're still looking at prices to start moving lower, right, to complete minor 3, because we also get some good support signals here from the RSI and MACD. So that is the one case. The other case, of course, would be that we break above that level. If we break above that level, that means that we could see even prices, this could be minor intermediate one, we could see even intermediate 2 moving around that level over here, which means that this is going to be some sort of complicated pattern, okay, with the correction lasting much longer than we anticipated in the beginning. So we could still expect prices then to move a little bit higher, then should see it's most likely going to be another WXY, which is going to get prices at least at 63.40 in the medium slash longer term. So I would pay attention to what happens on gold and also dollar yen, because there seems to be some risk, sort of risk of appetite following the latest disappointing US-China headlines, I would say, and also WTI, because it's not just only affected by the trade wars, of course, but because we have the EIA report today, and it's very, very interesting to see what's going to happen since Fed speech isn't really moving the markets.